Friday, July 20th, 2018, Monaco 64, home of alternative economics and contrarian views. So this morning I want to look at some indicators of possible financial chaos. And I don't want to sound alarms or anything about the end of the world or anything like that. But it's interesting that just a few days ago, Ben Bernanke, Hank Paulson, and Timothy Geithner met at the Hoover Institution at Stanford University. If you don't know, Ben Bernanke was Fed chairman during the '08 crisis. Hank Paulson was Secretary of the Treasury. And Tim Geithner was the New York Fed president. And they're saying here that America may not have the tools to counter the next financial crisis. That's a story from CNBC a day ago, right? The other headline is USA Today, financial crisis. Ben Bernanke, Paulson, Geithner offer lessons from meltdown. And Bloomberg says 2 days ago, Bernanke, Geithner, Paulson voiced some concern about next crisis. I personally think, are they doing this for the good of the United States, for your own good? No, I think they're doing this to cover their own backs because they are actually the problem. They created the next crisis, Bernanke, Paulson, and Geithner. And why do I say that? Well, because the last crisis was on their watch, and they did everything to save the system. They bailed out the banks. I know they didn't bail out Lehman's, but they bailed out everyone else. And they helped perpetuate the same culture on Wall Street, and I would add also in the city of London, even though they weren't directly involved, of course. So I want to talk about a few indicators that I think might be pointing to some problems down in the horizon. Is it real next week, next month? I don't know. It's always really difficult to tell. Jim Rickards talks about avalanches. You don't know when it's going to happen, but one little thing, one little snowflake could start it all out. Yeah, I'm just going to give you some indicators that I think might be pointing to some trouble ahead. And you may ask, well, how do you know that? Well, because I've been, I was there in 1992. There's a big, in 1994, 92, there's a big sterling crisis. 94, there's a big bond bear market. 2000, the big dot-com bubble burst. I was there in the markets working as a futures and options broker for institutional clients in the city of London. And then in '08, we all thought, this is it. We're sitting on our desk, everything imploding. We thought we're not going to have a job in 6 months' time. But it wasn't the end of the world, right? All these time, if you had held on to your investments or even bought some when everyone thought it was the end of the world, 94, 2000, 2008, you'd be doing well right now. But I think the next crisis, you might be, I don't know if it's going to be the right thing just to sit there and buy more and hope for the best. Because according to these guys, America may not have the tools to counter the next financial crisis. They've been using tools ever since Greenspan, saved the stock market in '87. So I've gone on a little bit here. So before I look at these indicators, let's quickly go through what the markets are doing this morning. I was away, well, I did my video yesterday morning, but I was away most of the day. My wife and I went to my daughter's university graduation, which was really nice, but it was a long affair. We were there from probably 3:30 till like 10 o'clock. Yeah, it was great. And I'm proud of my daughter for graduating. So anyway, I saw that yesterday. President Trump made a few comments about the dollar, that it's too strong, and that helped gold and silver rebound and the dollar came off. But gold traded to a low of 12.11 or around 12.12, and it's rebounded. So right now, quarter to 9 a.m. as I speak here, gold is up $1 at 12.2380. A range has been actually 12.15.50, sorry, to 12.27. Silver, I think we got down in the teens, 15 or 15.17, I'm not sure. But this morning we're higher, up 8 cents, up 0.5% at almost 15.40. And the range has been 15.23 to 15.41. The Dow is testing here 25,000. We've been below 25,000 overnight. The low is 24,925, but right now we're at 25,042, down 26. S&P is down 2 points at 2802. It has been as far down as 2792. NASDAQ up 1/3%, up 27 at 7381. The pound is really not looking good, and it's gonna link in with what I'm gonna talk about later. Pound is right now at 130. It's above yesterday's lows, but it's broken some really key supports, so we're down 15 pips this morning. Euro is fairly steady, 116.40, unchanged. The dollar has come off a little bit in the last few days against the yen. We were above 113. Right now we're at 112.39, but not much change from overnight. Crude oil is back up here. The WTI is almost back up to 69 actually. So we're at a 68.50, 68 handle. A few days ago we were at a 66 handle. So still quite volatile, the price of oil. And now I'll look at these two indicators that I think are kind of maybe pointing to something big coming up in the near future. Well, one of them is to do with what I used to work with, the bond markets. I used to be a futures and options broker. Most of my clients were like fund managers, mutual fund managers, a lot of them in Europe. I worked a lot with Italy. There's some big funds in Italy. Italians are one of the biggest savers in the world, actually. And I worked with other brokers in other countries who needed to access the markets that we had access to. I worked with some hedge funds, treasury departments of big companies, and the market I focused on was the government bond market, 10-year futures, German Bund futures, gilt futures, also interest rate futures, Eurodollar futures. That's not the currency, but the Eurodollar is the 3-month LIBOR future. It's one of the biggest futures out there for interest rates. So that's what I did mostly. I did trade other futures on stock market indices, sometimes commodities, because some of the funds I work with, they did a whole range of assets. But the core of my business was the bond market. So I found it interesting, excuse me, that this morning there's an article in Zero Hedge saying, calm before the storm. Treasury Risk hits 45-year low as shorts hit record highs. So what this article talks about here is that the range in yield for July has been the smallest it's since 1973. So that means that the price of the 10-year Treasury is not moving that much at all. It's been less than 9 basis points. It's been between 280 to 289. So very quiet, not much going on, despite all the stuff going on around the world, all the geopolitical stuff that we've seen. And it also points to the fact that there's a huge speculative record short position in the 10-year future, which is a sign that people expect rates to rise, right? Because they're going short the Treasury. But usually when speculators are massively short like that, it's a contrarian sign, right? So it could be pointing to some trouble in the markets. And still, unfortunately, people go to treasuries when there's big risks or a big financial crisis. It's still seen as a safe haven. Does that mean that I still don't think I don't think anymore we are in a bear market in bonds? No, not that doesn't mean that at all. We could still see the yields go back down with a crisis, but I don't think we're going to break the low from July 2016. So longer term, I think yields are still going to go higher. So that's an article that I found interesting. Yeah, the volatility basically is almost dead in the treasury market at the moment. And they point to the fact that how the Bank of Japan has basically destroyed the JGB market. No one trades in that market anymore because the government has intervened so much. I don't think it's as bad in the US Treasury market. And I remember trading JGBs. The thing about JGB futures that was interesting is that the size of the JGB contract was so huge that if you made a little mistake, you could lose a lot of money as a broker, an error. And the other thing is, well, you could trade JGBs in London while Japan was closed, but you had to roll it over at the open in Japan or else you'd lose your position. It was a contract no one wanted to trade. And usually clients only gave you a 5 lot or 10 lot order or even 1 lot. And it wasn't worth doing it, but you could lose a lot of money. So yeah, that's what I remember from the JGB futures. So what's the other indicator? Well, I think the other indicator is the British pound. And you might think, or sterling, you might think, what do you mean? Well, as many of you know, London is the center of finance for the world. It's not New York. And why do I say that? Well, London is has the biggest foreign exchange trading in the world. It's got the most international banks of any other financial center in the world. And the London banks, you know, the UK banks are still, they haven't been fixed. They were bailed out by the government. Ever since then, all the other governments have been supporting them. The Bank of England has printed, you know, and the government, they've pumped in trillions, I would argue even over £1 trillion to keep these banks alive because our economy is dependent on this fiat money Ponzi scheme, unfortunately. It's unfortunate, and I'm not criticizing UK or Great Britain as a country. I think it could be even better here if we had a sound financial monetary system. The only problem with the UK right now is our financial system. It's not the people, it's not the infrastructure, it's not the general public, you know, the skills. It's all here. It's unfortunate. I've noticed, especially in 2008, in the last financial crisis of '08, and I'll show you this chart here. Just before everything really hit the fan, the British pound went up to as high as, I think it was around 211 against the dollar, right? And that was in November 2007, and that was the top. And look at what happened to the pound during the crisis of '08. I mean, it bottomed in the February of, beginning of '09, right? But so we went from 211, in just like over a year, we went from 211 to 135. It was a major collapse in the currency there. And that was at the height of the '08 crisis, right? And then you go back to 1999, 2000, 2001. The drop wasn't as sharp, but as you can see here, towards the end of 1998, we got up to almost 174. And then June of 2001, we got down to a low of 135. Not as sharp a drop as in from '07 to '09, but nevertheless a big drop. And right now, yeah, the pound in April hit a high of like 143. And ever since then, it's been really coming down sharply, as you can see here. Some people argue it's because of Brexit and everything. I say that's rubbish. I've been saying for the last few years that Brexit is just a scapegoat. So this is what I'm looking at here now. We need to keep an eye on sterling. Right now, I've looked at some other trend lines, and there should be support around like 113 against the dollar in the next 6 months. That's like a trend line I've looked at. But if we see an acceleration lower of this, sterling against the dollar, that could, could be a sign that things are not well with the whole world financial system and the dollar system. And I think that's pointing to it. You can see that the move right now looks very similar to what we got in 2008. It's just maybe just the beginning of it. And let's keep an eye on that. So am I saying something's going to happen very soon? No, but you can see that even Bernanke, Paulson, and Geithner are trying to cover their backs. And that's why, what do? You might have some money in 401ks, IRSs, or ISAs in the UK. I'm not here to decide that for you, but next time there is a crisis, maybe there won't be maybe '08 was the last time they could save the system, because the system came very close to it. I mean, Greenspan, we've been spoiled, since '87. Every time something happens, you just stay there. And the people who've made a lot of money, the 1%, the elite, people like Buffett, they've known all along that the system would be saved because they're insiders. So they've actually probably been buying and then holding, and they've done well. But for us who don't know that, it's difficult. So that's why I stick to gold and silver, physical gold and silver, some cryptocurrencies, and and just live within your means. Do not be too exposed to this system. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on DTube, Steemit, and on Twitter. And I'll talk to you later. Take care. Bye.